traders, Raghee here, and with this sell-off, this further pushes the narrative about, is this an oversold market or is this a downtrend? So let's talk about the tools that we have at our disposal to determine this, all right? So we're going to start off with the Darvis, all right? What the Darvis will allow us to do is take the price zones that are in play. So we have the upper zone up in here, right? That Darvis logic, and that, again, zone in here. We have another Darvis zone in here. Now, there are two Darvis tools. There's the free version that's been available since 2017. That's the Darvis 2.0. And we also have the premium version, which I know a lot of you already have from my classes, and my bundle, which is the 3.0, which adds the signals here to also show us the confirmation of the turning points right there, okay? So 3.0 has the signals, 2.0 free has the lines, all right? So signals and lines for 3.0, lines only for 2.0. You can put this on your chart right now. Head on over to countdowntrader.com and you'll see where there's free downloads for grab and for propulsion. Just click on the link and you'll see you can get access to the box folder that has all these thing scripts. All right, what do we do with these, right? What do we do with these? And this is really important. First of all, price first, indicator second. Price first, indicator second. I'm going to make a pit stop at the V-score. We know that we're in a neutral environment. This is so important. The JT multi-trend is telling us that the lower row is yellow. Lower row is yellow. That's neutral. Two down red grab candles do not make a downtrend, right? They do not make a downtrend. And we're still above the 200 exponential and the 200 simple, I believe. And if we're still above that, we're still in the bullish hemisphere in terms of sentiment. The closer we get to the Darvis, the more likely we are to be oversold. So let's take a look at what the V-score says. The V-score says, hey, as long as we are above the mean of the volume weighted average price, we've got a shot at continuing to move higher. So take a look at the last few times we touched the mean and then look at the subsequent move. Touch the mean, subsequent move, right? So touching the mean, that zero level on the V-score, from a volume perspective, very important, very powerful. The next thing we want to do, again, in this yellow environment is, well, what's the slow stow have to say? All right, so many of you know this is the 21K 3D. All the settings are right here for you to see. 80, 20, overbought, oversold reading. We're not oversold quite yet. And if we're going to make a trip down to this 200 propulsion, that makes sense. So there's two ways you can read the stochastics here. Really easy. You can wait for the color shift, right? You can see that red to green color shift, which I would say is the more aggressive, the aggro signal, right? The more aggro signal. The other thing you can do is just wait for when we're moving back up and we get the signal of the cross, right? So the one line crosses the other, and you can wait for that. That's the more conservative signal. So this way you can basically do a couple things to make it more aggressive. One, well, you can go from the default 80-20 to 70-30, right? That's going to change the aggression of the lines here. I'm not a big fan of that. I know some people say, well, Rod, can I just shorten the period K? No, please don't do that. Just make the overbought, oversold more aggressive. But I think the 80-20 or even the 75-25 might be a good middle ground. Keep it here most of the time, get a feel for the conservative setting, then you can go to more of a moderate setting. I very seldom use anything below 75. Yes, you can go 70-30, but really it's probably going to be too aggressive. All right, so keep that in mind. Stick with that 80-20. And until we get down to that level, it'll be better off to consider that we might see lower lows in the Dow as we close in on those support levels at the Darvis and even this 200 propulsion. So now you get the gist of this. Let's just take a quick look at the NASDAQ with the same understanding. We're here right now. Here's your Darvis level, your automated support and resistance. Here's your 200 propulsion. This is a really nice level. Now what would we like to see? Well, we're going to do the same process once again. Are we still yellow? Are we still in a neutral market environment? Remember that the trend that preceded this yellow neutral was green. So we're in a bullish bias environment because a trend that preceded the chop was bullish. So I'm still going to have bullish bias even though this is neutral. Stochastic says the same thing really that the Dow says. Take a peek here. Let's stay above that mean. All right, that's great guidance. And then finally, what do we want to see? If this is chop, let's see us go red to green. That would be ideal. I love these red to green shifts. That's a little bit more aggressive. Or we can wait for the actual signal as they cross below that lower 20. All right, so we're not there yet, which means we might get a little bit lower low before we move higher. So if we don't get the signal, the conservative confirmation, let's at least hold out for the red to green. All right, and by the way, this is the making of a minor low pattern. This is a fantastic pattern to keep an eye on. Let's keep an eye on the high for today in the NAS at 15,372. That could be a breakout level with that pattern's probability. All right, finally the S&P, same idea. Let's do the same thing. Stretch these. You know, you can see they're here. I don't like to stretch them across because what happens is you get a very noisy chart. But how easy is it to look back and say, all right, these levels are all in play. Terrific. We know that we have a price level in play. Now, you might say, Rog, what about this yellow level right here? But take a look. Are we actually oversold? We're not even oversold yet. So that puts these lower levels in play. Now we're testing these lower levels, price first, then confirm with the V-score, confirm with the stochastic. So we're just heading now into the 20 reading. And again, I think for the S&P, we don't actually want to see a reversion to the mean. We'd like to see this market stay pretty close to a +1 standard deviation, maybe not go much lower than, as you can see right here, about a +6, 0.6, +0.6. So somewhere in between. You can see where the support is. We're closing in on that on the V-score. So I'm still quite bullish the S&P. We're just getting now into where this chop is looking a little bit more oversold. All right. I know this video went a little bit longer, but I want to make sure you see how you can manage where we are because we're not in a downtrend yet. We might if the JT multi goes red over red, but in the meanwhile, we'll use our tools to find out Darvis, V-score, slow stochastic, where the opportunities for a potential buy still may be. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.